Welcome back to Fast Money. We've got a buzzkill on Best Buy, the stock dropping more than 12% on the back of earnings. But something happened on Best Buy's conference call this morning that caught our attention, more specifically Karen Feinerman's attention. She texted me this morning about this. CEO Corey Berry saying we are definitely seeing more and more organized retail crime and incidents of shrink in our location. She went on to say, you can see that pressure in our financials, and more importantly, you can see that pressure on our associates. We heard similar commentary from Target when it reported last week. Karen's not on the desk, of course, tonight, but she's saying that this could point to a labor crunch, adding pressure to retail as the retailers are really trying to ramp up their staffing going into the holidays. The thought that crossed my mind also was maybe the consumers feeling a little bit of pressure. I mean, they're feeling certainly inflationary pressures, which Secretary Yellen had acknowledged yesterday in closing bell guy. And so maybe, crime usually rises when there's economic trouble.
Yeah, no question about it. I think that's part of it. I also think part of it is the fact that maybe these stores are just understaffed, and that's just what happens in this type of environment. I don't know. I'm not going to sort of go out on a limb and try to figure it out. What I will say, though, is Best Buy has been a monster. I mean, that stock was making an all-time high a couple days ago at 142. Yes, you mentioned we had this huge move down today. But if you look real quick, from August until recently, it was been in this 105 to 120 range, traded really well in between, building a base, broke out to the upside, obviously traded off today. But look at the quarter. EPS beat, operating margins beat, inventories maybe a little ahead of themselves, but I think you're going to see people start to get back in this name between this 110 and 120 level. I mean, Best Buy was a monster. I think it's going to be a monster again.
I mean, it should be a big holiday season. We mentioned these factors because we don't normally talk about these factors in terms of how a stock trades. But labor shortages, if that is one reason behind this, then you think wage inflation, pressures on wages going higher in order to attract the talent that you need, or pressure on the consumer, meaning that maybe going into the holiday season, they're feeling a little bit more pain, may not have as much money to spend. So there are a couple of ways that we're looking at it from a purely a trading perspective, Steve.
Yeah, I think that you don't have enough workers. Guy said this. Karen said it. You don't have enough workers in the retail operations, and also just remember, we've all been locked up, basically just shopping through e-commerce. So you have a lot more people entering the stores, a lot less staff there. I mean, I wouldn't read too much into it, but I do like that level that Guy pointed out. When you look at the recent low and the recent high, the stock has more than retraced about 50%. I would look to enter the stock versus exiting it at this level. I think the 120 level, if that holds or thereabouts, I think it's actually a good entry point on Best Buy.
Was this a flush, Tim, for Best Buy? I mean, does this interest you?
Well, I mean, Steve's talking about the chart. It takes you right back to a level where the stock really had been holding and actually had consolidated, built a base, and was looking for that breakout that it did have. I just think these comps were brutally tough, and I don't think these numbers were bad. So it sounds like I'm falling in line with Guy and Steve. I tell you what, at 14 times they'll earn 11, 10, 11, 15, according to the street, on 23. I mean, this is a $150 stock. And remember that their total tech is at a double-edged sword. I mean, we got excited about total tech. We got excited about subscription revenue. We got excited about, a new story at Best Buy. That's had something to do with the margin. Again, lower service margins. They also had a slightly more promotional environment. There were more shipping options. There were reasons why gross margins were down 60 bips. I don't know that there are reasons to throw this stock out the window, which they did, although rallied 5% off of those intraday lows and effectively closed on the highs. Nothing to get excited about today at Best Buy. Very disappointing day if you're long the stock. I'm not. I do think that stock is very interesting at these levels.
Pete, did you buy calls going into this quarter?
I've had some calls in here, Mel, and it's, they worked out. I just didn't get rid of them all. I should have. That was my mistake. I wasn't disciplined enough going into earnings itself, but I'd been in them for a couple of weeks. They worked out pretty good, but not today. The ones that I had left absolutely are basically smoke today. I will say this. I think those numbers were absolutely extraordinary, actually, for what they reported. But obviously there are a couple issues that they have to deal with, and I think Tim or somebody mentioned, Target and some of these stores, they need some more employees working in there. The labor shortage is an issue. I think that's a huge issue for Best Buy. I'm in there fairly frequently, and I see that there is a lack of people there not only to help you, but also to stop people from this theft issue that they're dealing with right now, which absolutely does play a factor into the margins when you consider it costs them $700,000 for every $1 billion in sales because of theft. That becomes a pretty healthy number after a while. So I think there are plenty of different ways that they can attack this and be a little bit more aggressive on their end, Best Buy that is, where they can continue to be the Best Buy that we always wanted. But I also think this stock has plenty of room to the upside, and I'll be definitely looking at it tomorrow.
Man, Pete is all over doing the channel checks in retail land, that's for sure.